What if we could have a fun, strategic conversation about legacy as well as whole life insurance? Welcome this morning to the Design Your Legacy podcast. I'd like to welcome Blake Brogan. He is a senior wealth strategist at Money Insights, a strategic wealth building firm dedicated to helping people to go from high income to high net worth. He has been in the financial services industry for 7 years and specializes in helping clients optimize their wealth building strategies by utilizing life insurance policies. Blake is passionate about helping wealth creators build financial freedom with cash flow and alternative investment strategies. Welcome, Blake.
Hey, Angelina, thanks so much. Appreciate you having me on. It should be fun.
Yes, this is my pleasure. And I have checked out some of your previous podcasts, and we're going to go in depth regarding all the benefits as well as some of the challenges to clear up any myths, because there's definitely an audience out there that is curious about this subject. And what better way than to have a heart-to-heart conversation? So to start, can you explain to some of our new listeners the type of products that you offer?
Yeah, certainly. And I think I might, before we go into specific products, just kind of back up and kind of give the high level of the people who we tend to work with. And so you mentioned it in your intro that we're working with a lot of people who are higher income individuals who are looking for alternative wealth building strategies. So a lot of the things that you may hear on TV and radio may be great for a large segment of the population, but for certain individuals, some of the more traditional paths, they might be looking for something outside of that. So those tend to be the people that we serve. So a lot of the individuals that we're working with are looking to try to replace a very high income with passive cash flow strategies, right? So at the end of the day, the financial freedom that they're looking for is to be able to replace what they're doing actively in their work now with either passive income or, investments, things like that. And so what we help them do is, one, find some investments, and then two, really optimize how their dollars are flowing in and out of those investments to create more wealth. So to kind of answer your question more specifically, one of the strategies that you've probably heard me talk about on other shows is what we call the investment optimizer. So for someone who's already down that line of saying, hey, I'm investing in, let's just call it multifamily syndications or anything that's really producing cash flow, they may love what they're doing on the investing side, but they may not love what their dollars are doing for them in between deals. So for example, a lot of people are building up money in a bank account that's just sitting there waiting to deploy to create cash flow. And so what we do with one of our strategies is just help them optimize where that money's sitting in between their deals and provide them a more efficient opportunity fund. So I'm sure we can go into more of that, but that's kind of a high level overview.
Yeah, that's wonderful. And I did check out one of your prior podcasts where there was a gentleman and he invested in a multifamily, and the question came up of, what do I do in between after I've bought something, and how can I keep the velocity going and the momentum? Because there's definitely a long-term, and that's what I want to stress in this conversation, a long-term vision and perspective when somebody is considering whole life and what whole life can do for them. So life insurance policies 101, can you break it down for me?
Yeah. So I think when people think of life insurance, obviously the first thing that comes to mind is death benefit protection, right? So if I were to die, my family needs, my family needs to be taken care of. Not the most exciting thing to talk about, but I mean, it certainly plays a role in it in people's lives. That being said, some of the strategies that we're doing, again, if you have a large income and you're storing up, large amounts of capital that are waiting to be deployed into investments, there can be some significant downtime. You talk about velocity of money, right? If my money's sitting stagnant in accounts that aren't earning much, I may love the safety and liquidity that I get, but it's not really doing anything for me on the growth side. There's no tax benefits, things like that. You can design life insurance policies as really not necessarily for the benefit of the insurance portion. So when we're structuring things, we're actually designing it more to build up cash value. And really that cash value is just a superior opportunity fund for other investments. So again, don't think of it as a place where you're investing your money. It's more of just a holding tank. So you can use these policies as a way to get the same safety and liquidity that you might get in a bank account, but significantly more growth, more tax advantages, creditor protection. So things like that, that you're able to generate that you just can't do in other types of vehicles.
Yeah. And one of the reasons why I think this conversation is important, it has to do with financial literacy. A lot of times people don't know the options that are available to them because unless it's like I walk into your office, someone might not explain it to me the next time I go to Starbucks. Right.
That's very that's absolutely the case. I mean,
Yeah. And I just want to add real quick, especially because today's affluent are 2/3 self-made, which means that their parents might not have had this conversation at the dining room table. So again, how do they learn if it's not through podcasts and the exchange of ideas and exploring what is available that's out there, so they know that they have more than just bank loans if they want to invest in that next commercial property. And we'll get into in a moment regarding the LIBOR rate. But yeah, one of your conversations before had to do with an individual, an entrepreneur that made their money through building spec homes. And again, that's kind of a conversation that's outside of the box because people think of like, let me invest in like mutual funds or let me save
yeah.
my money for, what the bank offers. And they don't necessarily think outside of the box, or they might think outside the box, but they don't know of someone who's done it before, or they might not know of who can I trust to collaborate with in partnership in order to make this happen. And then they kind of just stay stuck, but they kind of wonder in the back of their mind at 4 a.m.
Yeah, absolutely. And that's one challenge that's tough to solve is like trying to build that community. That is something that we try to do. We have a podcast of our own, very similar like this, which the reason that I love going on your show, other shows, having people on our show is you can just openly free share ideas. And then on top of that, we're building a community as well, of people in our world who are all kind of doing the same sort of thing, because you're exactly right that if you've never heard of some of these things, or maybe you've heard of them once or twice, but you're like, I don't really know people who are doing that. If you go to work every day with people who are only talking about investing in their 401k, paying off debt as fast as they can, like if that's your world, then you're not going to be exposed to, some of the other wealth building strategies that there are out there, that there's certainly a lot of people taking advantage of. It's just, you may not be in their world on a day-to-day basis.
Yes. So this is a wonderful introductory conversation because it's a whole other reality. Like I think Robert Kiyosaki talked about it in his cash flow quadrant book. It's a whole other reality when the money can start making money compared to your hours making money. It requires a new level of education and just a brand new awareness regarding what's available, as well as kind of the nuances, like what are the pitfalls? What do I need to watch out for? Because it is good, but there's also some things to be aware of in full due diligence. So let's talk about leverage and velocity. Where would you like to start us out today?
Sure. Let's talk about, yeah, leverage. Let's talk about leverage. So it's kind of my personal opinion that it's tough to like truly generate significant wealth without using leverage. Like you can build some sort of wealth, but if you look at, again, going back to some more typical type of investment strategies, like you mentioned, like mutual funds, yeah, you can create decent returns over the long time, I'm sure. But if you're talking about truly creating generational wealth, it is really tough to do that without using debt. You brought up Robert Kiyosaki, right? He's a big fan of using good debt, using debt to go buy assets that are going to produce cash flow to come back in your life. And I think he would have the exact same philosophy that utilizing leverage is really important to actually creating significant wealth. Now, I say all that to say that those are things that we're teaching people all the time, how to use leverage in the correct way. So we often use this term conservative leverage, because if leverage is it's a two-edged sword, right? It can be very good, it can be very important, and it can also be extremely destructive if not used in the right way. So knowing how to utilize leverage to create wealth and not destroy is very important. With that being said, go ahead. I'm sorry, I cut you off.
Yeah, absolutely. There was a helicopter going ahead, so I was just trying
Okay.
to mute out for a second. Yeah, absolutely. And I think when you're talking about that generational conversation, again, if this idea of wealth is brand new, it's like, again, how does someone design it? How does somebody structure it? Because it's a whole other reality if the conversations at the dining room table, again, include a relative that understands insurance products and what they can do for an individual, both their future, their children, their grandchildren. It's almost setting aside different entities and structures so that there is funds for new ventures, and there is funds, let's say if somebody wants to buy their first property, or just have that diversification when it comes to choice. Yeah. What's that smile?
So no, you're just hitting on some great points. So I think
I can
that's
do your
something that,
job now.
yeah, there you go. There we go. We'll
Just
just
kidding.
switch roles. I'll start interviewing you. No, what I think we're doing is, when you set up some of the strategies that we're doing, and if you do want to learn more about those, you can just go to moneyinsightsgroup.com as our website. And as you mentioned, we have a lot of free resources there. We have a member center, an education center, just so that you can go learn about some of the stuff that we're up to, without, having to find someone specifically and have a conversation about it. But what essentially that we're able to do when we're utilizing some of these strategies by just simply optimizing how our money is flowing in and out of deals using insurance strategies. Now, we're not designing these because we're only thinking legacy, right? So we're not saying, hey, I'm just going to move money into insurance products because I want my kids to generate, significant or have wealth 60 years from now when I pass away. What we're doing is utilizing insurance in a way that's going to help you create more wealth today. You can use things like leverage. You can use things like velocity to build more wealth. But at the end of the day, because we're using insurance products, yes, there are huge legacy benefits that are going to be passed on throughout generations. If you do go back and kind of study who were some of the very wealthy, successful families that have been able to multiply their wealth through generations, insurance certainly plays a significant role in a lot of those stories. Now, I don't know all the specifics of those, but certainly you read about and learn about some of these families, and insurance played a huge role in allowing them to multiply wealth throughout generations.
Yeah, absolutely. My paternal great grandfather, Herbert Carleton, was actually an insurance broker during the Great Depression. So he was very wealth minded. He would tell my father, in fact, to buy land. That was like his two words to my dad growing up. So
Yeah.
it's definitely, yeah, it's good to know, and it is something that is a resource that's out there. Which again, for someone that is maybe hearing this conversation for the first time, then I think it's really important. So would this have helped you with a whole life policy? Would this have helped you if your parents had provided a policy?
That's a good question. So I learned about some of these strategies that we help people implement in college. Was really the first time that I was exposed to some of those. So I went to school to study entrepreneurship. And just like you mentioned, it's a lot of these strategies are helpful for people who believe like, hey, I'm my best asset, my ability to start a business or to invest in things that I know and understand. That's going to really be what generates wealth, not necessarily handing my money over to a stockbroker or something like that. Again, there's nothing wrong with that, but just for a certain segment of people, having the access to capital is super important. So I learned about some of these strategies because I actually had professors in college who had other businesses on the side, and they're like, "Hey, yeah, I use these type of strategies to create an e-commerce business or other family businesses that they had started." And it's like, "Yeah, I use these insurance policies as a way to finance all those deals, and here's all the benefits that I get from doing that." And so I thought that was pretty interesting. So when I got out of college, I just started in kind of a normal finance job, and I was looking for the place, okay, where could I be storing my money? Because I believe, I have the ability to go out and create value in the world. And I think what I'm going to do in business is going to create the best rate of return for me and my family. And so I just needed a place to store money that was safe, liquid, but I had access to it. And bank accounts are really what people use now. But oftentimes when you find out how to structure these strategies, you can have that same sort of benefit with the safety and liquidity of your money, but significantly more benefits like growth and leverage and velocity and all the things that we've kind of already touched on here to just do what you were already planning to do, but do it in a more effective way.
Yeah, and I want to ask you about a couple of success stories in a moment. I realize I might be putting you on the spot there, but I wrote down in my preparation for today's conversation that some of the benefits include uh, the in terms of the power of compounding, the guaranteed interest exponentially. Number two, the ability to invest in property through other people's money, OPM, which is a short kind of acronym phrase in the financial industry.
Yep.
And then three, the guaranteed growth that oftentimes is more safe, sometimes in the bank, given the history of life insurance companies being very stable. So, are there any success stories that you can share, like of an entrepreneur that was investing in commercial property or apartment buildings and they were able to access their whole life policy?
Yeah, certainly. And so we're dealing with people all the time who are doing that. So I'll even someone who I was talking to earlier this morning, he's a, what he does is he buys e-commerce businesses. So that's kind of his thing. So he goes out and find, he's got a process, he's got a team. What he'll do is find businesses, e-commerce businesses that are for sale, or that he can come in, he knows he can buy them out and then raise the cash flow, double their revenue in 6 months or whatever he's able to do with his team and his process. So one of the struggles that he has is, he's always needing when he needs capital, oftentimes he needs to go to banks. Well, he's got a portfolio of maybe 20 businesses that he runs. So if a bank goes to finance a let's call it a couple $100,000 for that he needs to go purchase a new business for his portfolio, he's got to go through enormous labor with the bank in order to try to prove that he's got the income and all the assets to approve him for a loan. So one of the things he was wanting to do is like, hey, how can I set up a strategy where I'm building up capital that whenever I want to tap into it, when I see an opportunity, because I'm looking for opportunities all the time, that I don't have to wait. I don't have to go to another bank, get some 26-year-old, in a suit to approve me to get some capital that I know I'm going to go double my money with. Right. And so, yeah, he's someone who's been using our strategies for years. He builds up his capital in these overfunded life insurance policies. Whenever he needs access to a capital, he just lets us know. Money gets wired to his account, and then he goes out and does his thing. When he has the returns that he's gotten from that business that he's produced, he just dumps it right back in the policy. Again, that's his opportunity fund to go out and do this cycle over and over. So I'll mention one more thing, because the reason he would do that is because that whole time, Angelina, as you mentioned, your money continues to compound. So you're able to put money into the strategy. By contract, it's going to compound for the rest of your life, which is great. But at the same time, you can leverage that, as we just talked about, borrow against your money in a way to go out and go do the deals that you were already planning on doing. So you have total control over when and how you access your money. But at the same time, you have essentially your money growing for you in multiple places at once.
Yeah, and I think the idea of compounding, it is one of the eighth wonders of the world. If somebody can experience that, it's very different than being on the other side of like consumer debt or
Certainly.
something. Yeah,
Yeah.
one of the things I also like, because I'm a big fan of trust, is that the beneficiary to a whole life insurance policy can be a trust
Yeah,
for
absolutely.
added
Yeah.
benefit.
Yeah, and that's a lot of our clients, because they're in that higher income world. They have those kind of things, whether it's revocable or irrevocable trust, depending on their situation. Oftentimes, the proceeds will go into trust.
Yeah. So let me do a bird's eye view for a moment and pull back to the 5,000-foot eagle's view. Okay. So, what are some of the other challenges sometimes that you might see high net worth individuals come across, whether they're a next gen family member, maybe in their 30s or their 40s, or someone who comes into wealth for the first time, or they just have to manage it? Maybe they're in their 50s or their 60s or 70s.
Yeah, I think one of the big challenges is, again, and go back to what I kind of said, maybe 15 minutes or so ago, is that the typical strategies that are out there that they're being inundated with from a financial perspective are hard to accomplish, I think, at a higher income. So, for instance, if I'm making $60,000 to $100,000 for my career, maybe putting money in the 401k, building that up till I'm 65 and spending that down, maybe that's a good way to replace my income, right? But if I'm making a strong 6-figure, maybe a 7-figure income, you need so much. It's almost impossible to put away, tens of millions of dollars into accounts that you could live off for 30 years and not really worry about running out of money. So some of the challenges is like, okay, where am I deploying my capital? How can I create cash flow? Are there ways for me to generate cash flow in a more significant manner than what I might be doing in a typical stock market type of investment? So getting involved in those communities, learning about what other type of investments are out there. Taxation is a huge thing. If you're making high income, how can we invest that money in a place that's going to reduce my taxes every year? That could be almost as valuable as the cash flow that an investment's able to provide.
Yeah. And so for those tax benefits, maybe they can do something philanthropic and they can call the legacy planner.
Absolutely.
Little plug
Absolutely.
there. Okay. Okay. Yeah, absolutely. I think the tax benefits are important as well as understanding their safe harbors and their options. Yeah. So I would like to transition over to tell me why it's better to utilize a fixed rate for a loan compared to the LIBOR rate plus, LIBOR being the London rate offer?
Yeah, so that's an interesting question. So it
Floating
can really
versus
go both.
fixed.
Yes, certainly. So one of the cool things about what we do, so a lot of what we do is using leverage, right? We're big believers in utilizing leverage in the proper way. Again, we refer to it as conservative leverage to go out and create more wealth than we would have been able to without doing that. So one of the things that we do with our clients is help them as they're talking about, okay, how do I leverage what I have to go create more, is provide them different options. So let me give you an example. There are ways that you can have fixed interest rates that you can borrow against your wealth to go out and go create, create more value in the world and create more wealth. Well, also there's ways to do that on a variable rate, just as the question that you're asking. So what's some of the strategies that we're able to do is set up a fixed rate loan that is always accessible, right? So you can always know, hey, I can go get it for this rate. Now that might be higher today than what we'd be paying on a variable rate, but you can use outside banks. So you can take loans from life insurance companies, you can take loans from banks. And one of the ways that we do this is we just set it up with our clients that they're able to toggle back and forth all the time. So we can set up a policy where we know, hey, we always have access to, let's say, 6 or 7%, but if we want to go to an outside lender, it's a variable rate. And if they have a lower rate at the time, we can go tap into their resources. And then again, if interest rates like we are in today's market are starting to spike up, if they continue to do that, we can always flip back to the fixed rate. So for me, I think it's important to be able to have that option of to do one or the other, because both play a major role.
Yeah, I would think it would offer some peace of mind. And I know that there are some investors out there that will chase the best deal. And it's always like they're going to follow the rabbit, wherever the deal is. But at the same time, I know that there's others that just want to sit back and say, let's just have a holding position for a moment.
Yeah, that's absolutely true. And so again, what we're trying to do is help them. Okay, if you're someone who's saying, "Hey, I want to be wise with where I'm deploying my capital. I want to be able to strategically analyze these type of deals." What we're doing is saying, "Hey, as opposed to just putting money in a place that inflation's just eroding the value of that cash, if we can start moving that into a place where we have the same benefits as a bank account but significant growth, so that we know that as inflation continues going on, you're not I've even heard from our clients like, hey, I'm not like dying to jump into a deal right now because I know my money's safe, it's liquid, I can tap into it any time, it's not being taxed, but I also have significant growth." And so one individual was telling me that, he thinks these strategies even make him a better investor in what he's doing just because he's got more patience. He doesn't feel like, oh man, if I got significant sums of cash sitting around, it's burning a hole in my pocket and being eroded away.
Yeah, absolutely. And I think in some of your prior presentations, you've talked about two buckets. And I just want to circle back again because some people are visual learners, and this is obviously an auditory conversation.
Yeah.
So there's two buckets of money. There's borrowing from the insurance company, and then that's a bigger bucket. Would you just speak into that for a moment?
Yeah, sure. And so really this goes back to the idea of leverage that we've talked about. How do we use leverage in order to create more wealth? So again, if someone is a investor in multifamily or whatever you're doing to create wealth, let's say before you start using some of our strategies, what you're doing is you build up money in this bank account, an opportunity comes up. What do? Oh, I liquidate my bank account and I go out and invest, right? So fairly simple. The downside of that is, one, your money's not doing much for you before you invest. And then two, your money is really only working for you in one place. Hopefully you're getting a great rate of return in whatever you're doing on the investing side. That's awesome. By implementing the two bucket strategy, you're building up a bucket, an opportunity fund, just like you would be in a bank account. But then when it comes time to invest, as opposed to withdrawing the funds and stopping the compounding of our money, you can actually borrow against it. So for instance, you have $100,000 of cash value. You want to go invest $50,000 in a deal. You just call up the insurance company, you call up a bank and say, hey, I've got this 100K sitting over here. Will you give me a loan using this 100K as collateral? And they'll be like, yeah, sure. I'll send you the 50,000. And then I go invest that. Now, what's happened by doing that is my $100,000 in my bucket continues to grow, earn that compounding interest that we're talking about, and I'm able to invest my money in another place. So as opposed to only having my money work for me in one place, now I have it growing for me in two places at once.
Yeah, I think it's a very wise strategy, and I just want to emphasize how much education matters because there's more options than just the bank. And interestingly enough, the bank owns insurance policies, life insurance policies.
Yeah, they do. They have
So if it's
it.
good for
They
the bank, it's good for us.
yeah,
Go ahead.
they have their own name over it. It's called
Oli.
bank. Yeah, BOLI. Yep, BOLI. So it's the same sort of thing. So banks are taking money, right, and they lend money. That's how they're creating wealth. And then you look at where they're storing their money. Yes, they're buying real estate. They're doing tons of stuff, but a large portion of their cash holdings are sitting in life insurance policies. The reason being, same sort of reasons I've kind of been hitting on here, which is they know it's safe, they know it's liquid, they know there's generational planning that can come from it. But they also know they're going to get significant rates of return that are going to outpace interest rates, certainly.
Yeah, very cool, very cool. So, have you invested in a policy yet?
Oh yeah, that for
Yeah,
sure.
and
Oh yeah.
and what's a good so if someone's listening and they'd like to dip their toe in, what's a good entry? Like, where could they get started? Like, at is it 100,000 or kind of what's the number with yourself and your firm?
Yeah. So, I mean, we're geared towards serving people who are on the higher income spectrum. That being said, we're able to serve really anyone. So when you say getting started, what we do is when someone comes into our world, we're looking at, hey, where are you right now? Where are you hoping to go? And then how can we get you to where you're trying to go as efficiently as possible? So we're not starting with like, hey, you should do this exact strategy. We want to learn what you're about and how you're trying to get to where you're going, and then just assist you getting there in a better way. So when someone comes into our world, what oftentimes what we're asking is, what kind of capital are you looking to deploy? Where are you looking to deploy that? And then is there a way for you to do that deployment of capital in a more efficient way? So we design the policies, the strategies around wherever people are. So there's not necessarily a set number. Hey, you need to have 100K a year,
Or a
10,000 a year,
million or
whatever the yeah, or a million a year. That's not necessarily how it works. We kind of meet you where you are, look at where you're trying to go, and then just say, hey, here's a route you can get how you could get there. And if it's best for you to do that, then people can pull the trigger and move forward. And if it's not, it's kind of like no harm, no foul. I learned some things and maybe this is going to be better for me in a different time.
yeah, very cool. I just wanted you to kind of spell out how easy it is that if someone wanted to reach out over email, that it's not a complicated process. They can just, yeah,
Yeah. So we just start typically with just a 30-minute phone call, just kind of a get to know you, very simple, kind of no sales, just we want to see where you are, where you're trying to go. And if there's a way for us to help you get that, get you there faster. So if you do want to reach out, my email is blake@moneyinsights.net. You can go to our website though. I would start there, which is moneyinsightsgroup.com. And there's a lot of free resources there.
yeah. And I'll have you repeat that again at the end of the show. So you
Yeah.
you would check in regarding their vision. So speaking of visions, and this is a legacy podcast. Tell me the vision you have for your legacy, and also how do you personally define this word?
Yeah. So how do I define legacy? For me, I mean, I'm married, I have 3 children. My legacy, I really think is a lot going to be through them. And so what I want to do is just be a good steward of my time, the resources, the knowledge, the skills that I've been given, in order to both grow financially, but also, grow as a person, and just really try to exemplify, good godly characteristics for my children and what that looks like, and then grow our wealth in a way that our children are just able to expand on that. And really, at the end of the day, has passion in financial things, but really, I believe that it's just a conduit to greater things. And so, when you have more resources, you're just able to serve people better, right? Again, it goes back to this idea of a two-edged sword. I'm sure in your world, you've seen so many families who have been wrecked, by the financial blessings that they've had have also, been a curse to their family in terms of the relationships they've had. I'm sure you have many stories there. I mean, I know that's what you're doing on a daily basis, jumping in there, but it can also be used for good as well. And I know that's what you're doing.
Yeah, absolutely. I think that there needs to be emotional education when it comes to wealth, and there also has to be a financial education because there are choices out there, and there's also a lot of different pitfalls, whether it's the taxes or understanding policy, understanding trusts. I mean, if trusts are good enough for the Windsor family across the pond, right?
Yeah.
With Charles, I think they're good enough for Americans. So it's worth exploring, what is available, and also to have that protection in place, because it can, like we are talking about in our preamble, it's like, well, what if you, Blake, have a big red fire truck, but I don't? Now, what type of dynamics does that create socially? Or if issues of entitlement come up, there's a lot that can be unpacked when there's survival and feelings, like the F word, feelings. Yeah, that word. But yeah, because people definitely have feelings when it comes to lifestyle. And if I mean, if we talk about freedom for a moment, if there's like a multifamily investor and they've been able to exit their 9 to 5 in like what I call that Robert Kiyosaki cash flow quadrant, they've left one side of the quadrant and gone to the other, and now they don't have to have someone like a boss per se telling them, do this, or and putting the pressure on them. And now they're free, but all their friends, let's say, or even certain family members, still are underneath the thumb of someone. That's like, that kind of changes the dynamics a little bit. And how do you navigate that? There's all these nuances that come with, well, we don't want to talk about status and privilege, but sometimes it's like those conversations are going to come up. Yeah. So speaking about, go ahead.
No, I think you said that well. And that just goes to the people that you're interacting with on a daily and weekly basis and you see those things, and yeah, finances are can be a blessing and can be a curse, certainly.
Yeah, absolutely. And I think also, so I don't have children. I know you do, but there's this idea of like, okay, well, if they're blessed with a vacation every year, if they're blessed with, dad and mom just write a check for that new car, they think it's like, well, it's so easy, but they don't necessarily see the backstory of how it was earned or how it was put together or the choices that were made. And sometimes choices are easy. It's like, well, I just walked into Blake's office and he informed me and I
Yeah.
signed on the dotted line. And other times choices are, there's a whole narrative about hard, the sweat equity of what went into that, of like, I wasn't, an overnight success. It was like 10 years or 20 years. And then it was like, oh, then the fruit came from the vine. Yeah.
I think even I've been trying to share some of that. Like, so my oldest is 5 right now, and it's like, we'll go get a haircut together, something like that. And I have him, hand the money over, and then just gives me an opportunity to try to explain like, hey, how are, we got a service from him. We paid him from that service, but dad goes to work. He's providing a service to other people, and that's why I go to work, is so we can, yeah, have money that we can go exchange for other goods and services, and the world's a better place when everyone can specialize in what they're doing. So yeah, those are super important.
Yeah, yeah. And I just want to highlight for a moment some of the things that you're also passionate about, perhaps for your legacy, is you talked about your appreciation of men's retreats and giving through coaching others with golf, tennis, and I think
Mm.
you said basketball.
I do, yes, I do like sports. I really played a lot of golf and tennis primarily throughout college, through high school and college. So those are things that I enjoy. I've always enjoyed kind of the coaching aspect and teaching other people. So that's something that I'm pretty actively involved in. I coach a high school golf team now. That's always a fun time. Really, I just get to play a lot with some high schoolers and get some free golf. So that's a great time. But yeah,
And
I
it's
think
also life balance. Yeah. So
yes,
not just
and
like
it
just
it
work.
yeah, for sure. And golf in particular just gives you a way to interact, especially for men. Like we a lot of the best conversations I think that we have together are doing an activity together. So it might not just be always sitting down having a 45-minute conversation face to face, but like actually playing a game together. But the conversations that can happen from that are powerful.
Yeah, and the mentoring that also can occur.
I
Yeah.
think about the times, I mean, when I was younger, I looked up to people who were in their 20s and 30s and thought, I can't believe how cool these guys are, and they're so much further ahead of me in life. And so while I'm not that cool, I'm probably not as far ahead as they think that I am. Getting to spend time with high schoolers and middle schoolers is awesome.
Yeah. I just want to highlight before I ask you about your guiding principles and values. I think it's great that you take pride in your faith. because I think also one of the traps that can come with money is arrogance.
Yeah.
Yeah. And that accountability piece. Like, I mean, God will check someone on something.
Yeah, for sure. There's no doubt. And I think, I mean, yeah, I mean, pride is something that comes from success. So that's something that always needs to be fought against. I mean, you know, most the kind of the sin downfalls that people have eventually has stemmed from pride in certain areas. So I'm certainly not immune to struggling with those kind of things, but yeah, I mean, especially financial success can lead to, hey, I'm very dependent on myself. I don't really, you know, need any outside things. I'm very independent, and so that's always something to guard against.
Yeah. I just respect that you're willing to talk about your faith, and I'll take you off the hot seat in a moment.
Yeah.
I just respect that you're willing to talk about your faith, because I think sometimes people are afraid to when it comes to the business world. Like, whatever you do, don't bring up, like politics or religion. And I'm not saying that you have to talk about religion. I'm just saying that you're willing to own your faith. And I just think that's cool, because there's other people that are watching, and maybe faith could be the thing that can help them when it comes to designing their legacy.
Yeah, I mean, I appreciate you saying that. It's obviously not something I'm bringing up all the time, but I mean, when asked in inappropriate such situations, I am not. I mean, I'm not afraid to go into those subjects. Certainly.
Yeah. Well, I think it's to me, I might articulate that it's something that is helping to develop your legacy, because it's a part of your values and principles. So I'm going to get into that now. So if you could speak into, like, let's say your top three core values, or any of the guiding principles that have kind of helped you get to where you are today, or that are helping you design your intentional legacy, what would you say?
Yeah, and I think that's a good question. So I've actually done this exercise with our family. So with my wife and kids, and I was like, it was really with my wife. It's like, hey, what do we want? What do we want our family kind of legacy to be? And it's hard to, you know, you probably do a good job of coaching people through that. I've never really had any formal coaching on that, but some of the things that we came up with, we want to celebrate others. So others in our family, when someone else has a success, we want to be celebrating them, right? So, you know, not being too about ourselves. When someone in the family has success, we want to celebrate that. We want to have fun together. So that means taking trips. We want it to be, you know, some of the things we'll say is, hey, it's fun to be a Brogan, right? So we want to do things that's like, hey, if you're part of this family, like we get to do fun stuff. And so those are really, I mean, I know those are maybe a little surfacey, but you know, those are some principles that we have tried to implement as much as we can in our family.
I think they're wonderful. You can't turn fun down. Everyone needs
Yeah.
more fun in their life. Yeah.
It's probably easy to say when my children are a little bit younger. I know when they're teenagers, they're kind of probably be like, "Oh yeah, my friends are a lot more fun than my parents." So I know that time's coming, but at this point, we've done okay with it.
Oh, I think it's wonderful. I'm gonna have to remember that phrase. It's fun to be a Brogan. That is a meme right there. That's a slogan.
Well, you can coin it for yourself. You can
Yeah,
adopt that
yeah.
one.
I think it's wonderful. I absolutely think it's wonderful. And in fact, it must have been maybe 20 years ago. I actually sat in a seminar. It was a church seminar, and it talked about family legacies. But the idea didn't actually come from that moment. But it was like, it
Yep.
was an interesting, deeper conversation. And I thought, well, at least the church is having that discussion. And we got a little binder. I don't know where that binder is today, though. But yeah, it was in Santa Monica. I remember.
Well,
Santa.
yeah, I mean, if it resonated with you to the point where you're remembering it 20 years later, they were obviously talking about some important stuff at that time.
Yeah, it was deep. It was deep, because either a family comes together, or they can get distracted by the world, and smaller, irrelevant disputes. And so it almost becomes the glue if there's a
Mm,
shared vision and a shared purpose and a mission statement. Very cool. And
mhm.
any core values?
Core values, I mean, yeah. I mean, faith is important to us. I mean, we've talked a little bit about that. Yeah, just honesty, of course, is an
Okay.
important one. So I don't know if I have like specific core values that I've played out. That's probably something I need to do a deeper dive on.
I might say planning, I think, is a value of yours.
Yeah, certainly. Um, yeah, both I think probably from a lot of what we're doing on the financial side, like helping people, you know, create a roadmap to where they're trying to get to. And then, yeah, planning your family. What is that going to look like? What do we want this, family unit to look like? Where are we trying to go, and legacy we're trying to leave?
Yeah, and I might also add, and then I'll take you off of the hotspot. I might also
Yeah.
add a love for humanity, a love for people.
Yeah.
Yeah, because if you're
Yeah.
so good.
I'm sorry. I cut you off. I think if you're, yeah, at the end of the day, if you don't have a servant's mind, it leads to just a lot of, the more inward you get with the way you're looking, I think the tougher life can get. Like you're, a lot of satisfaction comes from being others oriented, and then good things come to you. But truly, like in business, in life, in your family, like if you can say, hey, how can I improve your life? How can I serve you in these sort of ways? I mean, I get a lot of satisfaction on doing things like that.
Yeah. Well, I think it's very fulfilling. Yeah. Yeah. If not, because the materialism alone can be empty.
Yeah, there's
Yeah.
no doubt.
Okay. So now, if there's a call to action, please share with the listeners, and then I'll read my closing paragraph.
Okay, great. So, I mean, if you do want to learn more, again, we try to be very educational focused. So we've worked hard to create free resources that people can go learn and kind of study and say, oh, is this for me or is this not? So you can go to moneyinsightsgroup.com is our website, and I would check out our education center. We have a member login. We have courses that we've designed that you can go do. It's all free. And then there's a place there if you want to reach out and have other questions, you can always do that.
Very cool. Very cool. And they can learn about the 2 buckets.
Yes, exactly.
Yeah. Thank you, Blake, very much for coming on to the podcast today and speaking into what it is that you offer to the public, and also just speaking into your legacy, because it is very personal, and that you also have spoken into your values. I know one of the things I echoed in the emails before this episode was this idea of positive role models, and I think people need to see it modeled in front of them, so it's more than just a story in a book or something that feels far away, because they might be able to relate to you, and and if they can relate, then this idea of inspiration, then they might say, hey, I can take personal agency of my legacy and be more purpose driven, compared to what I say sometimes in my coaching practice is, what apathy is doing to your legacy is just not right. So if they can start caring again or reclaim it, then that's where the magic is.
Yeah, it's great. Thanks so
Okay,
much for having me on, Angelina.
yeah, I'm just going to read my closing paragraph.
Oh,
And
please. I'm sorry. Yeah.
so, in closing, I'm Angelina Carleton, the hostess of the Design Your Legacy podcast and the founder of Legacy Planning, a boutique coaching and advisory firm based out of Beverly Hills, California, but international in those I advise. I hope to dive deep into subjects that can help a person define, develop, and execute their legacy, and continue to scour the landscape for those who can be great resources to every dimension of your legacy. For many listeners, there can never be enough education and preparation in the moat around your castle. Whether you find yourself with new wealth or generational wealth, may the content on this channel be an anchor in any storms ahead. We do our best to provide original content for your emotional and intellectual curiosity. And if you're listening on YouTube, please remember to like and subscribe. Or if you're tuning in on Apple Podcasts, please remember to rate and review. So thank you so much for joining us this week. And thank you, Blake, for speaking into your legacy.